Hello everybody and welcome back to CA Swati Gupta, Chartered Accountant. This is a response video and I'm here to simplify some frequently asked questions and a little confusing topic. Okay, let's begin with a simple practical live balance sheet and see how the figures are presented and deal out with the frequently asked questions. Okay, so firstly, on the asset side, you can see there is trade and other receivables and contract asset. Now, there are multiple questions that are asked repeatedly, and they ask that what is the difference between them? Can we club them and record as one figure? Okay. If not, then what is the basis? On what basis this particular bifurcation is made and presented into the balance sheet separately? Okay. Let's deal with them. Firstly, you really need to understand the topic. As per IFRS 15, you have to check whether the invoice is raised, the bills are raised or not. Okay, whether the invoice is raised or not. If invoice is raised, this means there is unconditional rights. There is unconditional rights. Okay. And therefore, you can record it as trade receivables. Any amount for which invoice has been raised, bills have been raised. Okay. This means unconditional right and you can record that amount as trade receivable. Okay, or you can say debtors. Now here, if invoice is not raised or you're not allowed to record a certain part of the revenue, okay, why so? Because the invoice is not raised. This means it provides conditional right. Okay, it suggests that there is conditional right and therefore such part of revenue for which invoice has not been raised, but you have to record the revenue and therefore the contradicting sum debit must be there. So you have to record this as contract asset. As contract asset. One important thing, trade receivables is a financial instrument, whereas contract asset is not a financial instrument. Not a financial instrument. Okay. Now let's try one example, take up one example and figure it out how this is practically applied. So simply, for example, the financial year is from April to March. Okay. And we have a contract entered on 1st March for 4 months for 40 million. Now, on 31st, what should be the revenue recorded? What should be the trade receivable? What should be the contract asset to be shown in the balance sheet? Okay, simple question arises. Now, as per IFRS 15, it says that you have to record the revenue on the basis of percentage of completion. Okay, so for example, percentage of completion on 31st March is 25%. That means you have to record the revenue, how much? 25% of 40 million. That is 40 million into 25%. It equals to 10 million. So you can record your revenue 10 million. Now out of this you have to check for what amount the invoices has been raised. Here in our example, invoices has been raised for 3 million. So simply trade receivable for the invoices raised, that means you can record your trade receivable 3 million. Now contract asset is equal to the amount for which not any invoice is raised. So not invoice raised. So out of 10 million of the revenue, for 3 million only revenue invoice is raised. This means 7 million. For 7 million, the invoice is not raised and therefore you have to record it as contract asset. Simply let's pass a basic journal entry. Revenue, you will be recording 10 million. Now, for trade receivable, invoice raised is 3 million. And for contract asset, it will be 10 million minus 3 million. That is 7 million. Okay. This will be reflected in your balance sheet. This will be also reflected in your balance sheet, or you can simply say statement of financial position. And this will be shown in your PL. Okay. Now let's see how it impacts your balance sheet. Okay. Because we know one is financial instrument and another one is not. So in your balance sheet, that is statement of financial position, when you go for the asset side, there comes non-current asset and current asset. Right now we are only considering current asset. Under current asset, you have financial asset and you have non-financial assets. Okay. Under financial asset, since trade receivable is your financial asset, you will be recording it as trade receivable, for which the invoice has been raised, that is 3 million. For non-financial asset, it's a contract asset. It's a non-financial asset. Okay. And the remaining for part of the revenue for which invoice has not been raised, that is 7 million. I hope this clarifies the concept, this clarifies your confusion. Okay, please comment down below if this video is helpful, if this video has clarified any sort of doubt. Please comment us any suggestion, any other video that you demand for. We'll get back to you as soon as possible. If you like the video, don't forget to like, share and subscribe. See you in the next video. Till then, take care, be safe, stay tuned. Also, don't forget to check out the description box. The link for the course, video course and notes is given. Please download the app, enroll for the same, and happy learning.